Hi, everyone. It's Peter Kraut of Silver Advisor with another episode of the Pay Dirt podcast, where we interview management of companies that we both recommend and deal with. So today I'm joined with Stefan Gleason, who's president of the Money Metals Exchange. Stefan, thanks for taking some time today to talk with us about money metals.
Oh, my pleasure, Peter. It's great to be with you, and obviously, I'm a big fan of the great content that you put out all the time.
Thank you very much. So, Stefan, let's jump right into it. We want to talk about money metals today, and I'd like to know if you can give us sort of a 1 minute summary of how money metals
Sure.
came to be.
Yeah. Well, I was in public policy for 15 years, free market economics, and in the Washington D.C. area, and I went into business with a friend of mine who had a publishing company, and it was a financial newsletter, self-reliance newsletter. And the main reason was, we were already talking about inflation and how to hedge and gold and silver as investments and so forth, and there was a lot of demand among our subscribers for gold and silver. However, the people that really could afford to advertise were really the ones that were doing the high premium markup, bait and switch type stuff. And we didn't want to put those people in front of our subscribers. And so we basically just launched the bullion business ourselves, basically recommending and selling the products that we actually think are a good value for investors that we ourselves were investing in. And that is, gold and silver that's priced very close to its actual melt value of the metal. And so we had that advantage of having a built-in customer list already, and we're able to launch to get to scale pretty quickly, which is necessary when your margins are as small as they are in bullion. And so that was the beginning. That was in 2010. I brought in my brother and my brother-in-law, and we built the business in Idaho. Today we have over 100 employees, and have served almost 1 million customers nationwide. And so it's been a journey. We're not done yet. We're still kind of working on our building our business and making it even broader and more resilient. But we've come a long ways in 15 years for sure. We're now at this point in the top three largest precious metals dealers in the U.S.
That was something I was going to ask, and so that's very exciting to hear that you've come all this way in about 15 years and have made it quite a successful venture. And I think that given how things are playing out right now, the future looks
Yeah, bright,
certainly brighter,
unfortunately. Yeah.
brighter for this
Yeah,
area at least.
yeah, for sure.
Stefan, what are kind of the most typical common precious metal scams? You mentioned that
Yeah.
is something that you kind of founded your business on trying to avoid, your customers, I should say. So how
Yeah.
can they spot, what can they do to spot what kind of due diligence should they?
Yeah. Well, the most pernicious and prevalent of these is the ones that's been going on all along, and that is the high premium, high markup, so-called rare coin or collectible and commemorative coin sellers. Unfortunately, because of the margins, which are so massive for them and for their spokespeople and so forth, they can afford very expensive TV ads. They can afford, celebrity spokespeople, and they can pay huge commissions to their salespeople, and that turns it into kind of a boiler room, high pressure sales environment. And unfortunately, pretty much everybody who's advertising on cable television is doing this model. Free investor kit, free IRA kit. They call you up. They won't leave you alone. They call you daily. They sell you on very high margin stuff. Maybe you can buy bullion bars and rounds and coins, but you kind of have to fight them for it, if because they want to sell you on some special issue, this or that. And it's really sad because people are, they're at the point where they actually realize I need some gold and silver, and they've gotten to that point, which is hard enough because you're having to push against the conventional wisdom. Sometimes you have to fight with your stockbroker, just to even get agreement or to get to the point where you're actually buying gold and silver, and then you get swindled at the end by these people. And we see the other side of that because that stuff comes back. People try to sell it, and they find out, wow, it's really worth just about what the price of gold is or silver, and it's really sad. So that's the number one thing. Um, there are many other scams out there. I mean, one of the things to keep a very close eye on is failure to deliver or unexplained delays. There's no reason, especially right now when the market, frankly, in the U.S., the retail market is not that busy. It has gotten a little more busy in the last month or so, but it's not that busy. There's no justification for any delivery delay. If you order from a dealer that has poor communication, unexplained delays, that's a warning sign. I don't care how cheap their prices are, getting not getting your metal at all is way more costly than paying for a dealer that's running a business prudently, that is able to deliver and meet their commitments. So we encourage people to look at BBB, look for complaints of patterns of delivery delays. That's pretty much the number one red flag that you've got a problem with a dealer. And in many of the blowups that have occurred in our industry, and there have been many, unfortunately, a lot of times you could have seen it coming if you'd done the basic due diligence, even before ordering, by looking at something like BBB. There are other review sites, frankly, that are connected with scammers themselves. So I wouldn't recommend any other review sites. But that's something to keep an eye on. A depository that claims that they have the metal that you bought from them that isn't actually storing it. So maybe they're not doing proper auditing. Maybe they're just, they're scumbags. I mean, unfortunately, there was a depository that blew up in Delaware that had been around for a long time. First State Depository. There was 100 million in losses. He had IOUs inside of the containers. He'd been borrowing the stuff out. So, looking at the people behind the business, watching what they say, making sure they meet their commitments, that's really fundamental. There's always going to be bad actors in every industry, and unfortunately, there's our share, quite very much our share of them in the precious metals industry. The other thing that's really interesting, I should mention, right now there's this massive scam going on that's not really targeting existing precious metals buyers, but it's being run out of call centers in India and China at scale, getting people through phishing software or other tricks on their computer to think that they've been compromised, that maybe they're under investigation for child pornography or some other crime or whatever, or their money's about to be seized from their bank account, and then they're persuading people to liquidate their money out of their bank account, buy gold, have the gold delivered to them, and then they're turning it over to people in parking lots that are supposedly going to hold it, like a government official, who's going to hold it for safekeeping at the U.S. Treasury or whatever. But this is happening at scale. Every dealer right now is dealing with this. We've had dozens and dozens of people call us up wanting to buy kilo gold bars or whatever. We try to, make sure that this isn't happening to them. We've talked many people out of it, but we've even found some people lying to us, telling us this isn't happening to me. And then after they get their gold bars, the sheriff calls and says, "Can you help us identify gold bars? They gave them to this person." So it's happening at scale. But again, this is not targeting people that are naturally already wanting to buy gold and silver. It's
Right.
other people who are being told to buy it and then hand it over. So that's something you're seeing in the news, frankly, a lot lately.
Sounds like very sophisticated
Yeah,
scams. And well, you certainly provided us a lot to chew on it and a lot of things to look for. And I guess to help potential buyers, consider what kinds of things they need to look at and what might be part of their diligence to before they go ahead and deal with a gold silver bullion dealer.
yeah,
You mentioned, Stefan, that in the last month things have been sort of medium, but have picked up a
yeah.
little bit. I'm curious to know what are some of the most popular gold and silver products, and what kinds of premiums should buyers be
Yeah.
expecting right now?
Well, unlike the gold price and the silver price, which is global, that doesn't necessarily mean high demand in the US. And we haven't seen high demand in the US for the last year and a half at least. In fact, we've seen more selling. So people are selling stuff back, especially gold, because of the higher prices. So we're not seeing as many new people coming in, maybe as you would think. And we're seeing existing holders in some cases liquidating. And so that has caused actually a glut of inventory of the minted bars, coins, and rounds. And so that causes the premiums to fall. And so we're actually seeing, although there's been an uptick in the last 6 weeks, we're actually seeing multi-year lows in premiums, meaning that you put very little into the extra amount above the spot price because the market is saturated with minted products. It's even below the cost of minting in many cases right now. So it's not a good time to be a mint at the moment, but
Right.
they'll have their day. They had their day a few years ago, they'll have it again. But in terms of the items, I would say, always the most popular coins, bullion coins, are going to be the American Gold Eagles and the American Silver Eagles in the US. The maple leaf is sort of secondary, but also popular, especially in Canada. But really beyond that, and even a better value would be your 10-ounce bars of silver, your 100-ounce bars, 5-ounce bars of silver, 1-ounce silver rounds, which are basically coin-shaped but non-government minted, lower
Right.
premium than say an American Silver Eagle. Those are a great value. highly popular. 1 ounce gold bars would be a popular form of gold. Premiums, on gold right now, we're selling Krugerrands right now for $39 over spot, 1% over spot.
That's
So that's quite low.
yeah.
And that's probably the better deal you'll see for the most part. But you're seeing lower premiums on it on just about everything, 2 or 3% in gold at most, except when you get into specialty items. Silver tends to be a little higher, but even that's 5, 6, 7% over spot, which is quite low historically. There's a minting cost, obviously, that silver market's going to have wider spreads. So, we encourage people to go for the lowest premium forms, and that's usually the bars and the rounds of either metal.
So that's a huge swing from a few years ago. I mean, I remember in the
Yeah,
depths of COVID, reading reports where in some places like India, they were paying 75, almost 100% over premium on some
yeah,
silver, at least. It was just wild. And
yeah,
then delays went from a few days to weeks, right? For
yeah.
delivery.
And the worst deal, the worst example of that in the U.S. would be the American Silver Eagle, which is run by an unfortunately incompetent government institution that's way more incompetent than even its foreign competitors, the other sovereign mints.
Right.
And they were actually reducing production when demand was sky high between 2020 and 2023. That caused premiums at the retail level to go to 15, even $20 per ounce over spot. We were saying, don't buy Silver Eagles, worst deal, don't buy it. And we would put notices even on the page, hey, lower
Oh,
premiums here. People still wanted it. Obviously a lot of people didn't buy them. But then things collapsed. The premiums now on Silver Eagles are it's now a decent value. It's
right.
still better to buy, we think, a bar or a round at a lower price. But unfortunately, the people that bought those at the time are now finding when they try to sell them back, when everybody's selling, that they're getting, barely spot for these things. So, again, we think people should avoid the coins because it's just unnecessary premium. At the end of the day, you're buying silver and gold, and you want to maximize the number of ounces that you're getting.
Okay. Well, again, some great some great info to chew on. Um, I know from speaking to you and from the info that we can all gather from your website that you offer different kinds of services.
Mhm.
And so I'd like to ask, why should a buyer opt, let's say, for storage versus having their metals delivered? What are your thoughts on that?
Yeah, well, we think everybody should start by having some physical possession of gold and silver. That's why part of why you own it is financial insurance, no counterparty risk whatsoever. But when you get into a point where you have larger amounts, certainly you don't want to keep that all in your house or in the bank safe deposit box, which you may or may not have immediate access to. But in your house, there's risks of home invasion. If you don't keep your mouth shut, word gets around. There's been these gangs from South America going through neighborhoods all over the country, doing home invasions, and usually they're doing it when you're not there, so it's more of a burglary. So there is that risk. You don't want to have too much there. There is a cost of insurance that would be higher than storage. If you want to actually put it on your homeowner's policy, you're probably paying 1% per year. Storage fees, at least at Money Metals Depository, are half that, and you get the security with it and the other advantages. So I'd say start by getting a little bit in your personal possession. Beyond that, if you're not comfortable having a lot in your house, but you're comfortable having it in the hands of a trusted depository, a third party. There is a degree of trust, obviously. In the case of Money Metals Depository, you can get an audit of it. You can actually do a video. You can come visit and we'll bring it out to you. But you can also do a video inspection of your holdings. We store everything in segregated bins and containers, and so your metals are your metals. It's not commingled with anyone else's. There's other types of storage called allocated, but most people store in segregated manner, which is really the most sort of fundamental way to store. Um, so you got to look at the ease of selling. If especially with silver, if you want to sell, you need to ship it off to an online dealer or take it to a local coin shop. You typically don't get much. You don't get a good price from local coin shops when you sell. So people don't necessarily want the hassle of having to ship it. So if it's in the depository already, it's very liquid. You can immediately sell it and get paid because you don't get paid until the metal is delivered. So that's another consideration. Some people want geographical diversification, or they live in a high crime area. But I would say about 95% of our customers want personal possession, and only 5% will actually store. So it's really depends on your comfort level. There is an expense. It's about a 0.5% a year, depending on the size of the holding. It could be a little more or a little less. Um, and there are a number of depositories out there. We think we're the best one. We're certainly the most accountable when it comes to our internal processes and transparency from what I've seen in the industry. But there's other good depositories too. Um,
So you've actually built out quite the facility
yeah,
in Eagle, Idaho. Maybe you can tell us about that. This is
yeah.
this is something to for
Yeah,
folks to know
it's kind of
about.
a kind of one of our great moments in our company is that we've now moved and built from the ground up this 40,000 square foot depository. It's the largest such facility west of New York, Class 3 vaults, which is the ultimate highest rating for a vault under the UL insurance ratings. 9,000 square feet in Class 3 vaults. Fort Knox, U.S. Bullion Depository at Fort Knox is only 4,000 square feet of vaults. Ours are 9,000. Now they have higher ceilings than us, I'm told. So maybe, they have as much in, cubic feet as we do.
Right.
But of course, we store mostly in terms of space, mostly silver. So that's much more bulky. Maybe 50% of the value is silver, but 95% or 99% of the space is taken up with silver. So we're built for basically a lot of growth. I mean, not just in our existing vaults, but we can expand another 10,000 square feet. And so we're ready to go. We're ready to secure. We have over about a billion stored there now in US dollars worth. But our capacity is immense, especially if it's gold. If it were gold, we'd be in the hundreds of billions.
Hmm.
But again, most of it's silver. So we're going to run out of space long before, we get
Right.
that big.
Sure. Now, you mentioned, your checks and balances. What are some of the best practices that you follow to run
Yeah.
the facility?
So we do internal auditing daily, weekly, monthly, annually, and then we also have series of external audits that go on, not just from, third-party auditors, but also the Department of Finance in Idaho has an audit, layer. And then we also have, of course, banks and other people that come in and do auditing. So we're very big, it's everything is the intention is for everything to be absolutely perfect. Every audit we've done externally has had absolutely no discrepancies whatsoever. Even the date on a coin, there was no discrepancy between our records and what was in there, stuff like that. So it's very rigorous. It's very labor intensive. Everything is anytime anything is moved in the facility, it's dual control. So you've got two people that have to sign off, even on a bin being moved from one place to another, or anytime something is opened, it has to be re-audited by two people before it's sealed and put back. And so there's just a lot of controls and procedures. I would say it's probably one of our greatest proprietary sort of, assets is our controls and our procedures, which we've spent years developing. And so I think we do it very well. We're always making refinements, of course, and the growth has required that as well. But it's quite a program, and we can provide people again with an online audit. They can do a visual inspection online. They can come and visit. They get asset sheets anytime anything is moved. By them, they have to sign off on it. Dual controls on that as well. So we're taking it very seriously in terms of our we're a trustee in essence of people's property, and that's a pretty humbling responsibility.
Absolutely. Something I want to highlight too is I know that you offer like a unique service, really. You provide lending against stored metals, and maybe you can tell us about that
Yeah.
and what advantages that brings to someone who uses the service.
Yeah. Yeah, it's not for everybody, but the reality is that you can utilize the liquidity or access the liquidity of your gold and silver without selling it. Now, a local bank will never do that. Maybe a bullion bank or JP Morgan will do it if you're a high net worth client or something. But you really cannot borrow against gold and silver except through Money Metals in the US. And so we only lend for investment and business purposes. So we're not a consumer lender. So if you want to borrow against your gold to put a new roof on your house, on your residence, we can't do that loan. So people have to certify they're using it for business or investment purposes. But That's just because we've chosen not to be a consumer lender, which is very, very heavily regulated state by state. So we'll lend up to 75% against somebody's collateral. And if the collateral value falls such that the loan to value rises above 85%, then you have 3 business days to make that whole or cure that default, if you will. So you have to either pay down the loan a little bit, send in more collateral, buy more collateral. So you have to take some action. So it makes it much more liquid. It's not just sitting there. You can access the liquidity. The interest rates are just a little bit higher than a home equity line of credit would be. One of the other advantages is if you're selling gold and silver and you have capital gains, which a lot of people have right now, that becomes a taxable event. So in order to access the liquidity through a sale, you incur a tax bill. If you borrow against your gold and silver and you don't think it's the right time to sell, but you need the liquidity, well, you avoid that tax bill because you didn't sell. You just used it as collateral. So we're pretty excited about this part of our operation. It's not, a major part of what we do, but it's a really neat thing for people who need it, real estate investors, business people, individuals who are making other investments. It's a very useful, flexible tool. And we see that growing quite a bit.
Great. That is very interesting. And I can imagine that although it's somewhat niche, it could certainly apply to quite a few people and help provide flexibility and help resolve issues that they may have to
Right.
deal with. Um, Stefan, I'm sure that our viewers are, given how the metals prices have been soaring
Mhm.
lately, they're curious to hear your thoughts on what you're thinking about what gold and silver are doing, um, where they're headed, the gold silver ratio, your price outlook. Maybe we can talk about that a little bit.
Yeah.
Let's start with the gold silver ratio. What are your thoughts and where do you think that's going?
Yeah. Well, we're at an extreme high. You've written about this. We've written about this. We're over 100. Well, actually, today I think we're slightly under 100, but basically 100 to 1. We only saw that ratio briefly in 2020 during the COVID crash and then in the early 90s. And the average ratio, I think, has been 70 to 1 in the last 20 years and 50 to 1 in the last 40 years, something like that. So we got down in 2011 and got down to the low 30s. So, that's a triple in silver from here, assuming gold doesn't move. So obviously, there's a lot more volatility in silver. The ratio could go higher. But I feel silver is a screaming buy, especially as compared to gold. And also in the case of people maybe wanting to swap some gold for silver, now would be an optimal time to do that. More than likely, that ratio is going to revert more to the mean, and you're going to see silver outperform. So, I mean, I'm very bullish on silver in comparison to gold and in general.
So great, thanks for that. Gold, recently hit a peak right around $3,500. I think it was an intraday, at least a futures price. It's backed off a little bit since then. What are your thoughts? Do you think what kind of outlook do you see from here,
Yeah.
given what it's reached and that it's backed off? What are your thoughts there?
Well, early this year, late last year, I expected a strong rally until April or
Mhm.
May. And, when we were at 3,100, I was interviewed by the Wall Street Journal and a couple others. And I said, okay, I still see a push into April and May at higher prices. I feel like we've seen that now. I think we're going to see sideways action probably till the fall. Through the summer, it's a seasonally weak period for gold and silver. I wouldn't be, if I had a short-term horizon, I wouldn't be making big bets, but 6 to 12 months, that's fine. If you don't have gold and silver at all, you cannot wait. You have to get some. You got to start. If you already have a lot of gold and silver, perhaps pause, but maybe favor silver if you're going to do new purchases because of the ratio we discussed. So, I mean, I definitely see silver hitting $50 in probably next year. I don't think it'll happen this year. 35 is kind of a key level. So I guess if it breaks above that, I mean, we could see it pretty quickly, frankly. But next year I think is what I'm looking for on that. Gold, boy, we've seen incredible gains. The dollar's weakening still, or starting to weaken, I should say, because last year gold did well in the face of a strong dollar and a strong stock market. This year the dollar has been weakening. If that continues, then maybe we do see a lot more here in the near term. But I have a feeling we're going to see sideways action for a few months. What do
Okay,
you think?
good. Yeah, I mean, it's interesting because I have a similar sense about where I see things heading. I've been calling for $35 silver. We saw that on an intraday futures basis. I think maybe a month or so ago, it
Yeah.
backed off from there. It actually started backing off before gold did. So technically, it hit my target for let's say first half of
Hmm.
2025, and I think we're going to probably see somewhere around perhaps 40 in the second half. And I completely agree. I've been saying, as you have, that I think the $50 target will be reached sooner than later, but I think that's for next year. And
Hmm.
we have to see things play out, I think, a little bit more before then. Silver often lags gold, but I do see that given the way it's been behaving, odds are pretty good to see a $50 price
Yeah.
sometime next year.
And and the big thing about silver is in the latter half of the bull market, it accelerates. And we're clearly, if the ratio is at, generational highs, that almost suggests we're in a bear market. We're certainly
Right.
not well into a bull market with silver at 100 to 1. So, we should see silver accelerate versus gold relatively soon, I think. Unless the
Agreed.
bull market's over, which I don't
Exactly. Which, well, I think, I mean, one never can say
yeah.
ever for sure, but I think we're probably in agreement. The odds of that are pretty low at this point,
Yeah. Yeah.
despite what's happened with the price of gold. Stefan, this has been great, but I'd like to end on a lighter note. Maybe you can tell us what is one of the most memorable moments that you've had since you've launched Money Metals back 15 years ago?
Um, well, I think the biggest thing probably was the period right around COVID, the beginning of COVID. That was absolute pandemonium in our industry, in our business, among our customers. The amount of demand that came in very, very quickly was absolutely overwhelming. We're talking like 5 to 10 times normal volume, pretty much within a few days, of it beginning. And it was sustained at a much higher level for several years, because they're not just COVID, but then you had the inflation, then you had the Ukraine invasion, then you had the regional bank crisis. So many bad things were happening. And that unfortunately, is happening, but it becomes an impetus for people to buy gold and silver and realize that, hey, I need to do something. So I think that's a preview to what we're going to see in the future. Because again, gold and silver is not really a mainstream investment in the US. It may be in Europe, or actually not even Europe, but certainly Asia it is, and the Middle East. When the West gets back on board and rediscovers gold and silver, then I think the amount of demand that can come in will dwarf what we saw in 2020. Um, I don't want to get into too much detail on this, but if people moving to another interesting moment, if you want to Google Arthur Lee Cofield offline, people can look that up.
Sure.
There was an incident that we were tangentially involved with, involving a theft and really a heist that was remarkable, that involved a billionaire who had identity theft, who had his bank accounts, drained, gold was bought, private planes were chartered. Uh, we're talking, 13, 11 million dollar purchase. Um, the guy who did it was in max security lockup in Georgia, and he did it with a contraband cell phone that they found in his armpit 6 months later. They had no leads. He bought a mansion for his girlfriend from jail. He ripped off two billionaires from jail. There was a gold, private security detail was hired, plane was hired, there was a gold component. If you want to look up
My
Arthur Lee
goodness.
Cofield, you can hear that story. It's hailed as the largest heist that's ever occurred from within a prison.
Stefan, it sounds like that sounds like the blueprint for a Hollywood blockbuster.
Yeah.
Seriously. I
I
mean,
have not seen it on Dateline NBC yet, but it's one of these stories. I mean, it got a lot of press when it came out 2 years
wow.
later. This is the first time I've probably ever commented publicly at all about this.
No kidding.
We were protected. We didn't have any losses ourselves,
Sure.
but and we did everything the right
Wow.
way. But unfortunately, there's a lot of characters that you run across in our industry, or tangential, and
Sure.
um, that's why fraud prevention, know your customer, controls, all that stuff is so important in our industry. And
Yeah,
you know,
I
you
mean,
working with people that take that seriously and know how to protect, but not just the business, but also the customer is important.
well, Stefan, this has been a stimulating and very valuable talk. I've really enjoyed, a little bit of time, digging into money metals with you, and you've certainly given us a lot to think about and a lot to consider, and you've certainly helped educate us on the whole bullion business and how to go about buying, storing, taking delivery of the metals and what to look out for. So. On that note, I really want to thank you for your time today.
Sure.
We certainly encourage viewers that are interested in purchasing precious metals to consider Money Metals Exchange. They are an advertiser at thegoldadvisor.com. Want to point that out. But again, thanks for your time today. It's been tremendous.
My
Appreciate it.
pleasure. Thank you, Peter.